Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us here at AusBiz. So, the US Federal Reserve has cut interest rates by 25 basis points to the 4.25% to 4.5% range, while signalling that the pace of rate cuts will slow next year.
We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market, while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate.
Well, Fed policymaking members now project they will make just 2.25 percentage point rate cuts by the end of 2025.
The slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just the general sense of what the committee thinks is likely to be appropriate.
And when asked how the Fed Policy Setting Committee will respond to the incoming Trump administration's fiscal policies, Jerome Powell said the focus will be on tariffs.
What the committee is doing now is discussing pathways and understanding, again, the ways in which tariff-driven inflation can affect tariffs can affect inflation in the economy and how to think about that.
Well, the revised outlook for US interest rates saw Treasury yields climb to multi-week highs, with the yield curve flattening between the 2 and the 10-year. The 10-year hitting a 4-week high of 4.45%, the 2-year up around 7 basis points to 4.3%. And the US dollar climbed against most major currencies, the prospect of a slower pace of rate cuts seeing the Aussie dollar tumble to 62.2 US cents. And the risk of sentiment saw Bitcoin fall back to 100,000 US dollars. So US stocks quickly erased earlier gains on the Fed's projected easing of interest rate cuts next year. The major indices extending losses late in the session. The Nasdaq down 3.5%. All the 11 major S&P 500 sectors were low, with real estate and consumer discretionary leading declines. And the Dow suffering its 10th straight session of declines, marking its longest daily streak of losses since 1974. And the growth stocks took a hit. Among the Mag 7 Tesla shares, they reversed sharply. Apple and Microsoft also falling. Other Nasdaq stocks, Zscaler, Atlassian, DoorDash, all down substantially. Nvidia and ASML initially bucked the trend, but still ended in the red. And cryptocurrency and blockchain-related stocks slid following Fed Chair Powell's comments that the central bank is not allowed to own Bitcoin. Shares of retailing platform Robinhood, that fell 11%. And US-listed shares of BHP and Rio also came under pressure. Oil prices, they settled higher after US crude inventories fell. However, gains were capped as the Fed signalled it would slow the pace of cuts. Brent futures settling at $73 a barrel. Gold lost more than 1%, falling to a one-month low, with spot gold at $2,606 an ounce, and copper prices also tumbling in the wake of that Fed decision, with also concern about demand from top consumer China. And iron ore down more than 2% to $102 US a tonne. Okay, so let's get some analysis and that market reaction we saw in the wake of that Fed decision. Ira Epstein joining us from Linn Associates. Ira, very good to catch up with you. Now, of course, 25 basis point cut was expected. You could also argue perhaps the slower pace of rate cuts next year was expected. Yet, what did you make of that market reaction?
I think it caught the market by surprise, the reaction, not the event. The market had built in that we were going to see fewer cuts. The question was, including today, were we going to have a total of 3 or 4 more cuts for 2025? So as it turns out, including today, the dot plot shows 2 more. Where the market got off base here, if you will, is we had been rallying so much up into this that the price-earning ratios had gone a bit berserk. You would also get into the markets overbought across the board. And I, along with many others, didn't see this size break coming out of it. Did anything really change? Well, yes. The Fed flip-flopped again, and that's what hurt the market. If you really dig into it, the Fed is now going again back and said inflation is now the enemy. The labor market's doing fine. They don't want to over-tighten to hurt it. But how do you stop inflation if you don't stay restrictive? So while the Fed tried to point out as best as they could and put the spin on it that their interest rates have come down and where the market's at, the simple fact is we are not down that much. They have cut a full point, 100 points. So what? It's still restrictive by any stretch. Take a look across all the other economies. So the immediate impact, as I saw it, Andrew, is the dollar soars. As you said, your Aussie dollar down to the 62 level. But what about all the other currencies? They all get smashed in the wake of it. And privately, probably the central banks aren't too upset with that because that spurs on the economies as long as you're not trading with the U.S. That's the big key. We're the ones that come to buy. We don't sell that much to a lot of the economies that are getting impacted other than energy. And energy, of course, with the strong dollar, there will be a problem from that. So what do you do with it like this? I think you look at this as the Santa opportunity. I think you tonight and tomorrow you start looking hard at what would you want to own on this big break and assume that between now and January 2nd, you'll get something of a bounce in the market and use this opportunity to pick those things up.
Would you expect that those Treasury yields and the US dollar are going to remain elevated, though, at this point?
Yeah, I do. I think that the Fed has told you, maybe two, but if you saw Jeff Gundlach of the Double Line, who's an excellent trader on these fixed instruments and has been very correct, basically he said maybe one. I'm not going to argue that. If inflation stays as sticky as it's been, and you and I have been talking about this for months on end, then how do you take everything down? You don't take them down by lowering interest rates. If anything, I feel that I got validation today on everything I've said to you and to other people in interviews, as I've been saying, why are you cutting? In fact, I don't understand today's cut. Today's cut and looking back at it was not needed. You're better off keeping that bullet in the gun if you need it. You got a full chamber. Now they've shot one, and at the same time they said, well, we're going to be restrictive. Why did you do today's cut? I don't get it.
And Ira, what did you make of Jerome Powell's comments in relation to the incoming Trump administration, particularly with its fiscal policies on the table there? Obviously, he made a point of highlighting the impact of tariffs.
Yeah, he went back and he quoted a study, I think it's from 2018 when they started working with tariffs. And his point was nothing's probably changed on that study. And I'd agree. The tariffs are a problem. The tariffs are inflationary, period. They're a tax, any way you want to look at it. And they're going to take away buying power. That is the way that I have to look at it, but they make goods more expensive. So that's the first thing. The second thing that you're seeing play out in real time in front of you. Today, the Congress in the U.S. was supposed to pass a budget. It was pretty much a given. And all of a sudden, we saw Elon Musk step in with threats. Those who vote for this budget, they'll see his dollars going against them. They may not be able to keep their seat. All of a sudden, this isn't going through. So there's more things coming. And given that who he's appointed for what, you're turning the United States upside down as flexing its muscle for what it wants and how it's going to get it. It's something to be paying attention to, and it's why the dollar is up to 108 for all purposes.
So now, Ira, in the past we've been speaking about how you're favouring holding gold at the moment. Does that remain, given particularly what you're seeing with the US dollar?
Why would I change it? The Fed just told me inflation's here. They can't seem to get rid of it. So if you're a long-term holder, why are you bailing on your gold? This will be the opportunity to pick up Bitcoin. You know, Bitcoin's famous for giving 20, 30% corrections out of left field. Very quietly, nobody's mentioned it, but in 2 days, it's down 8% at the close of business tonight. So you're seeing the breaks come in. Gold is off on a relative basis from the 28 and a quarter level to 2,600 tonight. So you've seen a break of about 8, 9%. They're traveling very similar if you really take percentage numbers to it, and I don't see a real difference in it. If you're a gold lover, you've got to employ the idea the Fed told you inflation's here and they're having a heck of a time getting rid of it. Why would you want to dump gold? The reason is because of high interest rates and the high dollar. That works against gold. It doesn't really work against Bitcoin. Think about that. So Bitcoin is probably going to be one of the better buys to come out of this.
Hang on, so are you switching something out of gold into Bitcoin as a result?
Yeah. You have to understand that Bitcoin is suddenly an asset. Do I believe in it? I do not. So let me go on record. I don't see any use for it. I don't see how you do anything but store value with it. In its own quirk, that's pretty much what gold is too. You've got to go out and mine it, and there's unlimited resources if you can find them. That isn't the case in Bitcoin. I never thought Bitcoin would go to the 100,000 level, so I want to go on record. I did not think that. But now that it has, and now that there's $2 trillion in assets, why would I fight it? So instead of fighting it, trade it. So trading it, I will. And they're even going to bring on the Merc 1 Bitcoin futures contracts. Can you believe that? Because the price is so expensive, they're going to bring that down. That's going to attract a lot of people.
Well, Ira, as always, appreciate your analysis. We look forward to catching up with you again in a couple of weeks' time, of course, in the new year. Thanks so much, and we look forward to seeing you post-Christmas.
Happy New Year to one and all, and a Merry Christmas and Hanukkah.
Thank you, Ira. All right, let's catch up with where we're likely to start locally. Well, no surprise, perhaps, taking a huge leg lower as indicated by SPY futures there, which are down more than 1.5%. So we will get right across that when we begin in just a couple of minutes' time.